Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours. Fairly calm market moves, no major moves in the equity markets or in bond markets. Currency markets also were sideways. There was some drop in oil prices overall, but in general, no major moves over the past 24 hours. Now, focusing on the big news from yesterday, in the UK here, Jeremy Hunt, the Chancellor, delivered his autumn statement. Very different statement from his predecessor, Kwasi Kwarteng, which was more on fiscal spending towards more fiscal austerity. And markets reacted very, there was a lull reaction in markets overall. Bond markets were out about 10-year bond yields were out 5 basis points. Equity markets didn't react much as we discussed earlier. Why this lull reaction in the markets? Perhaps Jeremy Hunt has been hinting towards past few weeks he's more leaning towards fiscal austerity, and that has been a well telegraphed message which has been delivered yesterday. If you focus on the statement, in the main, the statement confirms that UK faces additional fiscal tightening of around 1.8% of GDP over the next 5 years. Where that tightening is going to come from is around 45% of that tightening is going to come from the tax raises, which will start immediately in April. The bulk of it is on the spending cuts, but those are back-end loaded, so they don't kick in until 2025. So as such, there's no immediate pain to be held in the economy overall. So I think it's probably on the back of their mind. They want to balance out the economic recessionary outlook and slow down the economy, which is well underway, just to balance that out. So they have pushed that the spending cut further out into further years. Other part of the statement was on the energy price cap, which was raised by £500 to £3,000 annually from £2,500 previously. But more importantly, it has actually extended by 1 more year, so there's a little bit more further room for households to bring their to provide them a cushion in their household spendings overall. Also, there is still an additional support for households which are stressed, and also for more vulnerable groups. There is additional support for these beyond these energy price caps. These also importantly, these energy price caps assume that high in energy prices will persist, and we have seen since August the energy prices have corrected quite markedly. So clearly, the Chancellor have been very careful in balancing those recessionary and immediate pressures households are facing to the more balancing of the fiscal books overall. If you focus on the tax front, there is a top additional 45% tax rate is previously from £150,000 annually has been cut back to just over £125,000 annually. So it has been the top tax rate will start from £125,000 annually. So quite a balancing in that sense that the higher earners, the energy companies with windfall taxes will bear the bulk of this tax burden, while they have maintained the allowances for the lower tax earner, and also national insurance holiday, which has been enacted by the Truss government, stays on. So all in all, a fairly balanced statement, and hence the market reaction was sideways. What it all means for the Bank of England, I think there's no immediate impact on how Bank of England will have to react, but they will still have this difficult task of balancing the recessionary slowdown in the economy, recessionary outlook versus the high inflations. So I think Bank of England, all it does provide to Bank of England is there's no fiscal largesse, so that means that they can be a little bit more measured in their rate hiking cycle overall, which Bank of England and Governor Bailey has been highlighting over the past few weeks. Moving away from yesterday, this morning we got some positive news on the retail sales. Retail sale unexpectedly rose by 0.6% in October. And more importantly, the rise was much more broad-based. Non-food retail stores sales rose by 1.1%. The automotive fuel sales rose by 3.3% in October. And even the online retailer sales volume increased by 1.8%. So quite a broad-based rises in retail sales this morning. Which is probably baking into the positive momentum this morning. What's in for rest of the day? Fairly quiet on a data front, so no major data print out there. For now, we will leave it there, and thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.